Hola first-time buyers, this is the video that you've been looking for. In today's video, we are going to talk about the 10 simplest steps that you can follow when getting a mortgage. Getting a mortgage can be a very tedious and an intimidating process if you don't know what to do. So today, to guide you through this process, I have the one and only Iftikhar Mohammed with me. How are you, Ifti?
Hi, I'm very well, thank you. How are you with that?
I'm really good, Ifti.
Good.
So jumping right into the process, so what's the first step that a first-time buyer should be aware of?
Okay, so a lot of first-time buyers come to us and say that, look, we made an offer on a property, but they can't accept the property because they can't match the affordability. The first thing a first-time buyer should do is to work out their affordability, because that's very, very important for them. Because we find that a lot of first-time buyers go to estate agents and they just make offers on properties, but they can't afford the property. So that's not a good start, right?
Yeah.
So if you are going to make an offer, you need to know how much you actually can afford. So that should be the first step.
So Ifti, my next question is, what are the factors that affects the affordability of a first-time buyer?
Okay, there are a few things that they have to be careful about. The main thing that the bank will look for is your income. So they'll look at things like your pay slips. They'll want to know how much you earn. It's how much you earn that determines on how much mortgage you can get mainly, because they want to see whether you can afford it, right?
Definitely.
Yeah. So they'll look at that first. So they'll look at things like pay slips. And also number two, they'll look at what your financial commitments are. So if somebody is a parent, they'll look at things like school fees, nursery fees. Also they'll look at things like your sort of affordability in terms of loans and credit cards. So if you have huge credit card balances, that can have an impact on your affordability. And if you have loans, obviously you're committed to pay that every month, right?
Yeah.
So that will also have a problem on your affordability. So when I say problem, the affordability will start dropping when you have those. Another thing we'll have to look for is the age. So the older the person is, the mortgage they can get starts to reduce, because usually most banks will allow you to take a mortgage up to about 70 years of age. So if you are sort of nearing 70, they will give you, say, if you're 65, they might give you a 5-year mortgage, right?
Yeah.
So that's what they'll do. So the younger the better, because that helps with your affordability. But doesn't mean that the older people cannot take a mortgage, but the affordability will start dropping once you become a little older.
Okay. So once the affordability checks out, what is the next step in the process?
Okay, so once you know how much you can afford, it's always best to get your documents checked. Because what happens is, especially your credit file, because you can say, I earn so much, these are my commitments, but you might have a problem with your credit file. Simple example is like, there are people who's not in the voters register. Now that can have an impact on your credit score, which will impact your mortgage. Even though you can afford the mortgage, that might cause problem. So best thing to do is download a credit file and speak to an advisor about it, who might be able to go through it on your behalf. And they might be able to tell you, okay, this looks okay. And that's probably your next step.
Okay. So let's say that they do have a good credit score, how can they move on with the process?
Yeah, if you've got a good credit score, very likely you're going to pass. But it's always good to get a decision in principle. So that should be your step number 3. So get a decision in principle. What a decision in principle means is that the bank, in principle, says that you can borrow X amount of money. So that's what it is. So you tell the bank how much you earn, what your commitments are. They will issue you a letter formally to say that you can borrow so much. Now that can be arranged through a mortgage broker or an advisor, and that could be used for you to show the estate agent. Because a lot of the estate agents wants to see this before they can even show you houses nowadays. So it's always best to get this in place before you start looking for property.
When they find a property, what are the things that they should be aware of while moving on?
Yeah. So if they've found the property, the best thing for them to do is to make a mortgage offer. Right? So if they're happy with the property, I always tell our clients, have a tick list. Take a tick list and tick whether it ticks all your boxes. Unfortunately, very likely you won't tick all your boxes, but you might tick most of the boxes.
Yeah.
Because sometimes you want a big garden, you might not get the biggest garden. Sometimes you want it close to the railway station, but it might be a little further, but it might tick most of your other boxes, right? So once you're satisfied that it ticks most of your boxes, then you can make that mortgage offer. So when you make that mortgage offer, in the current climate, a lot of people are asking for discounts. So I know people who ask for 10% discounts, some ask for 5% discount. It really varies, right? It depends on the area as well. Sometimes you will get a discount, sometimes you won't. But what I always tell clients is ask, otherwise you won't get, right? So I think that's the next step. Try and negotiate a good mortgage offer, and then you can make an offer afterwards.
Checking rates. In what stage does the first-time buyer should check their rates?
Okay, so once they've made the mortgage offer and the offer is accepted, that's when you actually can look for rates. Because the reason is, if you check rates earlier and your mortgage offer, might not even go through, so it's no point, right? So once your mortgage offer is accepted, that's when you can make a mortgage application. So at that time is when you can actually check for rates properly. I mean, at the beginning you can look for rates, but that's not guaranteed because you're not making a mortgage application.
Yeah.
The only point at which most banks will accept a rate is when you make a mortgage application. So I think that should be the next step, to check rates.
So during the mortgage application process, are there any documents that the first-time buyer should have?
Yeah, I think that's a very good question and a very valid one too. So before you apply for the application, you need to make sure that all the documents are in place, right? So if you're employed, you look at things like your salary slips, your personal bank statements, and sometimes your P60, the tax certificate. Of course, banks will also want things like your IDs and a proof of address. So those are the main things that banks will look for. Again, there's no one-fits-all solution for this because each bank is different.
Yeah.
And they might want bank statements. Some might not need bank statements. So it really varies from bank to bank, right? But in general, most banks will ask those documents. But in addition, if you're self-employed, it's a different set of documents. If it's a contractor, it's a different set of documents they'll need. So it's always good to plan this in advance before you make that application. If you're having these consultations with mortgage brokers, you probably want to check those up front so that you can prepare yourself rather than be surprised in the last minute, right?
Yeah.
So that's a very good point.
Now, let's say that the affordability checks out, they found a property and they can afford the mortgage. What happens if something goes wrong in the application?
Yeah, so if something goes wrong in the application, it could be something technical or it could be something which the bank doesn't like. So if it's something technical, quite often if you're working with a mortgage advisor, they are likely to sort it out for you because they will have good relationships with your bank. If it's a good mortgage advisor, they'll go and speak to their contacts and sort it out. But if it is something that the bank doesn't like, because sometimes, you have things like bonuses. And sometimes banks say, look, we are not comfortable with the way you've got your bonus. So they could change their mind, right?
Yeah.
So you might not get all the money you need. So in that instance, obviously your broker will always try, if he's a good broker, and trying to resolve it if it's some misunderstanding, because these can happen.
Yeah.
If that's the case, you'll probably want to look at an alternative lender, because quite often there are lenders, often brokers like us, we check what's the best deal in the market and present it to you. So there's always a second best deal, right? So that might work for you if the first bank doesn't like. But most of the time, if it's a good mortgage broker, they'll get it right the first time.
Okay. So once the mortgage application is done, what is the next step in the process?
I think it's a survey. Now with the survey, you have a few choices. There are 3 types of surveys. One is a basic one. Now the basic one is generally done by the bank. Often it's free of charge. Some banks charge you a small amount to do the survey. So that's a basic survey. Now the second one is a home buyer survey. So you have a choice of selecting that as well. which is sort of, they call it a traffic light system, right? So they look at your house and give you a report. It's generally done by the same surveyor, right? So they give you a home buyer's report and they say, okay, if it's red, it's a bit dangerous. If it is amber, it's something that you have to pay attention to. If it's green, they've given you a green light. So don't worry too much about some of these surveys, because they will highlight certain issues, because even if there's a small crack, they sometimes highlight it, but you have to be very concerned about the red ones and some of the orange ones as well, right? So that's called a home buyer survey. And the third type is a structural survey. Now, if it's a structural survey, it's a lot of detail that goes through. So with a structural survey, a surveyor come in, spend a lot of time and give you a detailed report about the condition of the property. So that is by far the best out of the lot. It really depends from person to person which one works best for them.
Yeah.
If it is an older property, I'll probably go for a structural survey anyway, but it really depends on person to person, because all of these cost money, right? Unless it's a free basic survey from the bank. So you're the one who has to make a decision. But if it's a huge investment you're making in the property, or a old property, you definitely want to go for a survey. So that's what I would say. Yeah.
Okay. Who is an underwriter and what is their importance in this process?
Okay. So the underwriter is the person who checks your document on behalf of the bank. Now, for example, we always check your documents before it goes to the bank.
Yeah.
But we are not underwriters. We can't sign it off on your behalf. So we do the basic checks. As brokers, you have a good understanding of what underwriters are expecting you to produce.
Yeah.
And they are very likely to be able to tell you how much you can actually afford. But the final sign off comes from the bank's underwriter. So he's the one who signs off your mortgage, the loan, right? So that comes from him or her who works for the bank. So so that's the underwriter who looks at your application.
Okay. So now let's say that everything goes according to plan and the lender is willing to lend the money.
Yeah.
What's the next step?
They'll issue a mortgage offer. So that's probably one of the biggest milestones you can have. So if they issue your mortgage offer, that means they're happy to give you the money, subject to conditions not changing, right? So for example, if somebody loses their job after getting the mortgage offer, they've got to tell the bank, I've lost my job, right? And we know in which case the bank is likely to withdraw the offer.
Yeah.
So unless something major happens, they will offer you, they will give you the money to buy the house.
Okay. So once you receive the offer, how can the first time buyer withdraw that cash?
Okay, so banks don't usually give you the cash. The cash is always given to the solicitors.
Yeah.
I know there's some changes proposed in that area, but as of now, money is still given to the solicitors. Banks will never give you the cash, right? So if you are a first-time buyer, you're never going to get the cash. The money goes to your solicitor, who pays the seller's solicitor. Now that happens, later on in the stage, but they'll never give you the money. The money always goes to the solicitors. And before it goes to the solicitors, once the offer is issued, you get a copy and the bank also sends a copy to the solicitors. So the solicitors will check, and there will be some special conditions for the solicitor to check various things.
Yeah.
So once they're satisfied with that, that's when the bank issues the money.
Okay. So what is the next step?
Okay. So the offer is out. What will happen is the solicitors generally take over at that stage.
Yeah.
So once the offer is out, the solicitor will pick up your file and they will do the searches. You can do the searches a little early, but most of the solicitors start searches only when the mortgage offer is out, because that's when they think things get a little serious.
Yeah.
Right? But it's nothing stopping you from doing the searches early, but a lot of solicitors wait till the offer comes out. So they will do the searches. Once they've done the searches, the search results come, they will send you a report saying, these are the search results. Are you satisfied to move ahead? So they will ask you that question. So if everybody is happy and the bank is also happy with the searches, it's all good to go.
So what's the last step in this mortgage process?
Yeah. So there is like two steps. I'll break it down into two. The last one is the exchange, right? So if everybody is comfortable, the bank, the solicitor, you are comfortable as well, the solicitor will call you and ask, are you happy to exchange? Right? So when you tell the solicitors, yes, I'm happy to exchange, what happens is the solicitor communicates that to the seller's solicitor saying, we will exchange on this particular date.
Yeah.
And they will also say that we are completing on a particular date. So that's the next stage I was going to talk about. So exchange is a very important step because we say exchange is the point of no return. So once you exchange, you cannot go back, right? So that's the thing about exchange. So on that day, they decide, okay, we are both moving houses, right? I'm selling and you're buying, and then they will also get the buyer to put 10% deposit, right?
Yeah.
Unless your deposit is a 5% deposit mortgage, they will ask you to make a 10% deposit. So this is why I said it's point of no return, because for some reason, if you decide that you're not buying the house, that 10% is lost.
Oh,
right?
okay.
And there are other conditions as well. So that's why it's point of no return. So once you exchange, you will know exactly when you're going to get your keys. Now that day is called the date of completion.
Okay.
So that's when the whole sale completes, right? So when you complete, they issue you the keys, right? So then you can move to the property.
So you just watched the first time buyer mortgage process simply explained by the one and only Iftika Mohammed. So Ifti, thank you very much.
You're very welcome. Thank you very much for that.
If you like this video, hit on the like button, subscribe to our YouTube channel, and definitely hit on the notification bell to be notified whenever we post a new video. So this is it. I'm Vidara signing off from WIS Mortgages, Accountancy and Insurance.